Good afternoon. Welcome into Market Talk for this Monday, January 10th. Great to have you with us, and thank you for making us part of your day once again. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web, markettalkag.com. You can find all of our streaming links there, social media links as well, the latest news of agriculture, much more. It's all at markettalkag.com. Well, we have plenty to discuss in the graded livestock markets here at the close of Monday's trade. It's a big week ahead for the commodities with the USDA January reports coming up on Wednesday. Let's take a look at how things fared today. Let's bring in our good friend John Heinberg with Total Farm Marketing. John, good afternoon to you, sir. And as I mentioned, big week ahead of us here. And I know we'll talk more about the USDA reports in a minute, but overall, Monday's trade, pretty stout move to the downside for soybeans. That weighed on corn. Wheat was able to recover a little bit. Overall, just felt like a lot of pressure across the commodities here today.
Yeah, we started the day off with a risk off trade overall, and it just continued to keep that selling pressure on. Look at the equity market. Stocks were down pushing 500 points lower. So that got the dollar jumping, a little bit higher this morning and led into the cattle market, energy market. So, yeah, again, it was just a lovely way to start the week with risk off trade. Obviously, concerns regarding Omicron virus and the amount of cases that are happening across the globe is a major factor in this. Then there's just the big question marks of what are the Fed going to do? What's going to happen with monetary policy? You got people saying 3, 4, 5 interest rate hikes in the next year to possibly keep on top of inflation. If that's the case, that's definitely going to take some of that money out of the markets in general. So that's what we saw today, at least as the trigger. Now we got to see where we are going into the rest of the week. Obviously, we got a USDA report on Wednesday for grains. That's going to be a pretty big market mover, at least has the potential to be. These January reports, when you put the grain stocks in with the estimates for crop production for the last year, it's one of those reports you can look back 2-3 months down the road and say, yeah, that was the window when we turned this thing one way or another based off of those numbers and where the USDA sets the goalpost.
Very, very true, John. Well, looking at today's action first, soybeans were a leader to the downside. I mean, down 20 some cents across the board for the most part. I mean, and that acted as an anchor, it felt like, on the corn market as well. Talk about your thoughts with quarter beans today. Was a lot of this just position squaring, do you think, ahead of Wednesday's report? Maybe a little nervousness in the market?
I think it was just nervousness and actually just money flow again with that risk off mentality. You had a heck of a run in the front end corn and definitely in the front end of the bean market. And we saw some paring back today. Now, realistically, in soybeans today, at least the March beans, May beans, it was what we call an inside day. We traded within Friday's range. We were just down. So technically, didn't really break anything. No new low for the move or things of that nature, or a new low compared to Friday, which sometimes could lead to some selling pressure. Actually found a way to fight off the bottom a little bit by a few pennies. So we'll see what tomorrow gives. We still got a lot of things to think about going into that USDA report. Expectation for soybeans are to see the carryover go up slightly, about that 350, 360 million bushel mark, which is quite a bit higher than where we were in February. Then we got to watch what the USDA does anything with the demand side. We got export inspections today, and they were not very stellar, a little over 900,000 tons compared to 1.6 million last week. Maybe we'll see some adjustments because of the holiday, next week on the numbers. So we'll have to watch for that. But those are things that just weigh in a market that is still trying to balance what could be the damage from that South American weather. Forecasts in that region, southern Brazil, Argentina, Uruguay, they're looking at temperatures in the low hundreds pretty much all this week. There is some talk of some rain coming in over the weekend, but some more damage is definitely going to get done over the next handful of days if those forecasts hold true.
That South America weather, another big key as well. And I know also on the quarter soybean front, we got the Conab numbers coming up too here tomorrow. So that's another thing the market's going to probably be looking at as well, John.
Yeah, it's curious to see if we'll start seeing some reductions like the USDA. ConAb will basically be behind the schedule, at least in terms of knocking things down. But do we start seeing that crop come down? We've got a lot of private analysts kind of racing to the bottom here to see who can put the lowest number out there. And we've seen 135, 33, even 31 million metric tons. That's a pretty big cut. Still a lot of beans, that's coming to the marketplace, so that can kind of limit things here. But if we start get that feeling that this market has more room to go, or there's become some panic buying based on, more weather issues in that region, The biggest thing for us is still going to be the demand. That window is closing here for the U.S. export market, at least for beans in terms of its most activity. Do we get that tail to get extended and move out into longer terms and build some more demand into that market? That's going to be the big key going forward. Technically, we got some upside targets that are pretty lofty, and it wouldn't surprise me the way money likes to flow sometimes. If there's that perception of problems out there, we could see things really get kind of cooking, especially if we get ourselves a pretty friendly report.
You mentioned this to me before we jumped on the air, and I know you alluded to this here just a little bit ago. But really, front month contracts where we've seen a lot of pressure, corn, beans today. But on the corn side, I know looking out to some of those deferred contracts, it's not all doom and gloom right now.
No, D's 23 and actually starting with D's 22, still holding that 550, 555 window. It almost got back to positive today. Some of that's in reflection of what's happened in the bean market. That ratio between corn and beans for the new crop has kind of gotten extended to the bean side, and corn market's going to say, hey, we need our acres as well. But the biggest move here the last few days has been what's going on with D's of 23, not next year, but the year after. We've seen about a 30-cent jump in 3 days, new contract high again today on the move. We're seeing some good money flow coming into that market. It might be just a valuation, might be some spread trading in that regard. But you got 550, 560 pushing that area for 22. We were just at $5 here a week ago on 23. This market's starting to already make a statement that we need to get those acres bought to longer term. Then on top of that, we've seen a lot of export activity in November of 23 beans. They actually had 2 sales last week to unknown destinations for 23 beans. So they've moved up very nicely here as well. Just basically probably seeing some exporters step in and go, we need to cover ourselves just in case things do fall apart and get some coverage in for the next couple of years. So, volume really jumped on going back to that corn market. It's really jumped the last couple of days out there in D's 23. Not a lot of players in that market, so it can move kind of quickly. And again, like I said, new contract high today.
On the wheat market Monday, we found some buyers around mid morning. We turned that market around. Chicago, Kansas City wheat, those winter wheats is where we saw some green today. Spring wheat kind of fell apart late. But what are your thoughts with how the wheat market acted today and just its tone here as we head into the reports?
Yeah, it was encouraging to see it find some footing, get back to positive territory. Like seeing maybe a little bit more upside power out of that Chicago contract. Realistically, we're just going back up, challenging the resistance level or support levels, excuse me, that we broke through, and just didn't get much further. Obviously, they were expecting to see some wheat numbers be on the increase a little bit for that report. The demand is just not where we need it to be right now for U.S. wheat. Dollar being stronger does not help that overall. So it's going to be something that's a bit of a concern. Now, we've taken a lot of premium out of this market. If we get some negative numbers on Wednesday or some negative move in the other grains, wheat does have a bit of a downside still sitting in front of it. Maybe that July Chicago contract down about the 720 window looks like a potential landing spot if we can't get some traction here at this point. So, but again, encouraging to see it come back around today. Maybe that spring wheat in terms of its weakness, little bit of weather reflection in terms of at least some snow cover coming into those northern plains. Probably a little bit more on the spread trading side. We had a lot of length in spring wheat versus other contracts, and maybe we're seeing that kind of unwind here as maybe the conditions might be a little bit more friendly for that spring wheat come this spring.
All right, John. I know that the January report is always a hard one to predict. I mean, any report's hard to predict, but January, it's known for its surprises. There's a lot of data that we're going to be looking at. This is the biggest report of the year. What are your thoughts heading into this report? What are maybe some numbers you're going to be looking at a little bit closer than others, possibly, as we look ahead to Wednesday?
Biggest thing for me in these reports, first off, you can't trade the reports. You just don't know. Like I said, it's a wild card. You try to set yourself up one way or another, and the market just does whatever it wants to based on the numbers. You get those bearish numbers with bullish responses, when prices are already put into play. They're just hard to read. So as a producer, make sure you're looking at what do we need to go? Where do we need to go? Where's our risk? You may use short-term options like February puts or February calls just to keep you covered through the report. Just willing to sacrifice those funds. If the market takes off in the other direction, at least you got yourself managed through these numbers. So those are a big tool I'm using right now is a lot of the February options. Biggest things I'm going to be looking at, obviously, we expect production to stay fairly consistent, probably go a little bit higher, maybe on corn and beans. Then it's going to all come down to the demand. Does the USDA start making some moves on the export front in beans if we're going to be behind or not? Or are they going to anticipate and be a little slower move based on the South American weather that demand target can still get reached? Same thing on corn. Do we see some adjustments on the ethanol side and add a little more demand in there? Right now, corn still looks very friendly to me, and barring a major surprise in the numbers, this market's still going to reflect an overall tighter supply picture, very comparable to where we were last year. And with issues going on in South America, I mean, the South American weather is doing one thing. It's really putting the pressure on the U.S. producer to make sure we raise a crop again next summer.
I will echo the sentiment you had there. There's a lot of tools to kind of protect yourself heading into this report and afterwards. And I would think, as a producer, depending if we get a report wildly in one direction, good or bad, it's not a time to overreact or panic. Like you said, you can't trade the report. It's almost like Wednesday's going to happen, and you might have to let the dust settle a little bit before you kind of regroup. Would you agree with that?
Very so. And realistically, Wednesday is a day for the computers, the traders, the logarithm traders that got their numbers put together. They'll read the report and the market will move aggressively one way or another, or even not at all. We'll see what it comes out to. And then after that, when the dust settles, then we get to see the traders come in, the hedgers will come in, the people that are looking for supplies. That's when they'll make their most reaction. So a lot of times those report days just kind of sit back and hang on. Biggest thing is we've got really good value out there. That's something we haven't seen for a couple of years here, at least going into this report. A negative number could take a lot of air out of this report in this grain market, really big hurry. So again, think about those short-term puts. I would much rather sacrifice 12, 15, 20 cents and leave your upside and your bushels wide open than waking up on Wednesday or Thursday morning realizing we're down 80 cents in beans and 40 cents in corn and didn't have anything in place.
John, let's flip over to livestock. Really ugly looking day on Monday in cattle and hogs. I know there's a lot of things kind of stirring around both here. Really, just the protein complex in general, related to Omicron worries. I know that's a big thing at the forefront right now. Start with hogs. What's your thought after Monday's trade? This is two trading sessions now of downward pressure in hogs.
From month hog charts look extremely poor. Looking at that February hog contract, we were sitting at 84 2 days ago or 3 days ago. Now we're at 78 with more downside room. Good trend line around 75 and a half. Same thing's kind of happened in that April contract, trading close to 90 just a couple of days ago. Now we're at 80, 84 on the close today. We're hearing some buzz about Omicron affecting the plants. In fact, there was a Reuters article that came out today talking about Tyson and Cargill plants running quote unquote skeleton crews. And we could be seeing some animals back up. And that's something that's going to come into play in the cash market, especially in hogs. Hogs are more hypersensitive to things like that nature. And we really had some good premium moving into that chatter. So we'll have to kind of see how that plays out. But you look at slaughter numbers, we're down significantly week over week. Production was down. That's going to probably cause retail values to spike up because the demand is good, but at the same time, we don't have enough supply to meet that demand. And it could put this market back into a bit of a tizzy here in terms of that relationship between retails and cash and cattle movement and hog movement. So right now, charts look extremely weak with the triple digit losses today across that hog market. Again, looks like we're going to go test the bottom of the range, which is another $3-4 lower here on some of those front end months. And that weakness spread all the way out into those summer months, which are showing some really good value at the end of the week, breaking through the $100 barrier. So a little bit of a cautious time in the livestock sector in general, definitely in that hog market as we're trying to figure out where we are with cash and how that might be backing up in terms of the total supplies.
How about in the cattle market? I know some of those same worries as you mentioned. What are some thoughts you have in live at feeder cattle after Monday?
Same things are going there as well. Again, slaughter numbers are down. We're actually fairly tight on slaughter, down 4,000 or 5,000 head on a daily basis compared to where we were. Today was 113,000 was the estimate. Friday was 112,000 was the estimate. So we're starting to see some numbers there. Now, maybe that's a little bit on the tighter cattle supply, but more than likely it's probably the chain speed. And again, some of these plants maybe not running at full capacity. That's going to boost those retail values higher. Then we'll see what the cash trade does. Last week was pretty disappointing. 138 didn't go anywhere. Probably get pressured this week with that possibility. We'll see, especially with the futures market moving lower. Technically, just kind of some weak closes again today. The money flow, or at least the price action, is kind of disappointing. Maybe we got some further downside break. Now, still like this longer term. I still have a feeling we'll move through the Omicron virus fairly quickly. It might take us a handful of weeks. Cases might spike out and start seeing some recovery, and the cattle numbers are still friendly in the longer term, but at least maybe here in the short term, we're going to see some selling pressure just because that fear of that potential backup of animals going into the plants.
John, how about the dairy market? I know we've seen some volatility there. What are you seeing as we start the week?
No, nice pop back on prices again today. Decent trade in some of the products. Cheese has been softening here a little bit the last couple of days. Big move higher last week on that February contract, getting over the 22 barrier before finally correcting back. Same thing with the March, poking at that 22 barrier as well. Maybe we got a little bit out over our skis in that window and needed some money to come off the table. A lot of times that's going to be tied to that grain market. If grain prices rise, we need to get a little bit more milk production in terms of cattle. Got to bring some more cattle in, so they raise milk prices up. So there's a little bit of a relationship there in that window. So we'll have to see. Again, still a lot of great opportunities for producers to start locking in prices we haven't seen in quite a while. And that milk market, as we saw last week, how quickly it can take some value out. There's just not enough players in it. And if we get the downside rolling, a 75-cent down limit is not too difficult to reach, as we even saw that last week. So right now it still looks good, looks supportive. Demand is good at this time frame, but at the same time, there's good value out there, and producers need to make sure we just at least protect some value and keep that flexibility to the upside open.
How about the outside markets, John? Any thoughts you have there as we look to wrap up the show here today? I know we mentioned this, the stock indices down sharply here to start the week.
Yeah, another tough day there today, but we're working well off the lows here as we're getting close to the end of the day and still down a couple hundred points. So kind of a key area we need to watch if this thing's going to really make a correction. A lot of questions, what's going to happen with the monetary policy going forward? That's just making things uncertain, and that's what markets hate, is uncertainty. So we'll have to kind of keep an eye on any talk that comes out of the Fed and Washington in that regard. Plus, obviously, does the Omicron have another case of affecting the supply chains and things of that nature? I was in the grocery store last night. There are a lot of empty spaces on the shelves again, which is a little bit concerning when you think about it. Does that all come into play? If that's the case, the stock market's had a heck of a run, probably do take a little bit more air out of it, and that could have ripple effects throughout the entire market structure.
John, any other final thoughts you have for us today as we look to Wednesday, of course, in front of us with all the USDA numbers coming up? Any thoughts you want to reiterate for us?
Again, just thinking about that USDA report on Wednesday, it will likely be a pretty big mover one way or another. Just make sure you assess where your biggest risks are in your operation. If it's to the downside, don't be afraid to put some value out there, some money out there, and protect them with some simple puts to get us through the next, even a February put gets us through 10 days, at least gets you through those numbers, and then we can assess the situation. Like I said it before, much rather have a put go worthless that cost me 10 to 15 to 20 cents versus wishing I would have done something in case the market prices really tumble. We got big limits that these things can move 80 cents plus in beans, 40 cents in corn. That's a heck of a drop in value if you think about the bushels you have in the operation.
John, big week ahead. I know if producers need some advice with their marketing, you can help them out, and so can the team there at Total Farm Marketing. What's the best way to reach you guys?
Sure, love to chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. I know we got a webinar getting put together here for that report this week. So I believe that is free to consume or producers. Feel free to sign up and try to look into our information.
Well, John, we appreciate the time as always. Have a great rest of the week, sir, and we will talk to you again next Monday.
Sounds great. Have a good week, everybody.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to wrap up the show for this Monday, January 10th. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.